Hi, everybody. Barry McGuire here for Barry McGuire's Creative Real Estate Education. It's the Monday main event. It's Monday, March the 28th, and today we're going to talk about the bombshell that Olympia Trust dropped last week on private lenders, registered plan private lending. As you folks know, we do the Monday main event to help creative real estate investors learn more about creative investing. We have on tax people and insurance people and mortgage brokers and general experts. We have some of our students on talking about real deals. We talk about anything to do with real estate, mostly on the creative side. And we run focus workshops that teach people about creative real estate, because really, you all need some education if you're going to do this. Our next focus workshop is coming up May 7th and 8th. Donna will give you some info as we work through things tonight. But I'm just going to give you a little bit of a bio for Chad Robinson, who's helping us out today, and then we're going to bring him on. So Chad is the president of Align Mortgage Corporation, a private lender, and also IQ Lending Inc., fully licensed mortgage broker and real estate broker. 25 years of experience, lots of expertise, particular expertise in commercial development. And he's in the Ottawa area, has done development projects, offers lots of advice, has his own podcast called The Practical Broker. That's really good. You want a practical broker. You want somebody who's rule-bound, somebody who knows how to get things done within the rules. Done lots of work with first-time investors, motivational speaker, got lots of awards, Chad does. The MA Mortgage Architects Inc. Silver Award in 2019, Gold Award in 2020, featured on the CMP Hot List of Mortgage Professionals in 2020. Chad has a Bachelor of Economics, International Business from Carleton. And like all of us who appear on this program, he loves real estate. So now Chad is here today in the role of a mortgage administrator. So Donna, let's bring Chad on. And with that introduction, we're going to talk about the bombshell that, hey, Chad.
Hey. Thanks for bringing me on.
Yeah, well, thanks for showing up and giving us some of your valuable time to help people understand the 180-degree turn that Olympia Trust has gone through last week, I guess it would be.
Yeah.
I think pretty much across the country now, they've announced changes to their private lending registered plan mortgages.
Yeah.
And I was going to read them off, but I understand you have a PowerPoint that lists those changes. So if you want to pop up your PowerPoints, and we can look at exactly what Olympia said, because that's where I wanted to start, is with what Olympia actually had in their message, and then we can take it from there.
All right, let's see if this is working. Can you guys see the PowerPoint?
Not yet, I can't.
Not yet.
Yeah,
oh,
hold on.
Here we go.
Okay, from the beginning.
Now we can see.
All right. Don't know why that's not. Okay, well, I'll go from here. I only have one screen today because I'm over at a friend's house. So it's, anyways, thank you for bringing me on. And I appreciate to go through and share about this information and what's really interesting and how it's changed and why it's changed. And and give some great valuable information. I like to kind of start these things of what is private lending and what is Olympia Trust, because there's quite a lot of people don't even understand the 30,000-foot view, let alone how they did this about face. So basically, you can lend out your RSPs like you would go and buy a stock at, Tesla or anything else. You can actually choose, instead of just buying a stock or a mutual fund, you can lend out your mortgage. You can lend out your RSPs and mortgages. And it's not just your RSPs. You can do this with your TFSAs, your LIRAs, your disability RSPs. And basically, if it's a registered account, you can lend it out. And of course, there's rules around it. But the important thing is that it has to be through a trustee. So Olympia is one of the few trustees that is left doing this. I'm getting some feedback there. I don't know if that's my...
We're not getting it.
We're getting no feedback at our end.
Oh, you're not? Okay. All right, no. That's fine. Okay. So what Olympia Trust basically did is they came out and sent this email to everybody where they said, as you mentioned, very quickly, without any notice, that they're not allowing people to do syndicated mortgages. And what that basically is, it's a mortgage with 2 or more investors on it. And the other thing they also said is if the mortgage broker is related to the borrower or the lender, then you need a third-party administrator. And this was, as we talked about last week, just literally from one day to the next, no warning, deals about funding, put the brakes on it. So we had quite a lot of emergencies that we had to jump on board and fund these deals right at the very last second. So an independent third-party administrator. So in Ontario, it's very different across the country. The rules province by province are very, very different. In Ontario, we have licensed mortgage administrators, and that's a different licensing than a mortgage broker. You need to be a mortgage broker to get your mortgage administration. I mean, yeah, pretty much officially. And effectively, the mortgage administrator handles the mortgage after funding. So it helps with collecting mortgage payments, dealing with any NSFs or problems. And of course, there's a whole suite of issues going back and forth with the lawyer and helping fund the deals. But effectively, it's kind of like property management for mortgages. It's the best way I try to describe it is we're here where the real estate investors that don't want to deal with the tenants, just like on the mortgage side, we're here to help mortgage investors deal with the borrowers where they don't want to deal with all the paperwork and the little bit that goes on. So what does a mortgage administrator do? So we help instruct the lawyers. I kind of break it down into 3 parts. There's funding, post-funding, and discharge. So ensuring compliance is really the big one. And that's why we're here now talking about this. Is really the number 2 thing here is ensuring compliance and offloading liability. Setting up banking transfers and making sure the closing package is done. And a lot of people say, well, isn't that what the lawyers are supposed to do? And of course it is. But there's a million lawyers and everybody does things differently. And there's not necessarily consistency. So Olympia has come along and said, you know what, we want to offload all this risk. We want to make it more consistent. They know how all of us work and how we work with their programs and to streamline things. Post-funding, we take care of all the borrower payments and lender payments. We monitor for fire insurance, renewal management, property tax, NSFs, those kind of things. And we prepare all the discharges. So when a lawyer wants to pay out, they call us, we confirm the balance, we provide the discharge statements and handle all that. So what does this really do? So effectively, if you're one of those people that were used to doing syndicated mortgages, so a lot of people were buying properties with 2 or 3 or 4 investors. They were going up to 100% loan to value financing. They would help structure the whole deal. That is now effectively can't work the way it has been working. And it doesn't mean that we can't still work together and get those kind of deals done. You just need a company like mine. And there's other companies out there right across Canada that does this. To help facilitate the deal and make sure that it works properly and follows all the rules that Olympia is looking for. So we are a licensed approved administrator with Olympia Trust. Took us quite a while to get that. And it was, going through their compliance department, it took me better part of a year to get our administration agreement approved. And effectively, it comes down to them looking, our agreement basically says, when things go bad, or if they go bad, and touch wood, hopefully they don't, what happens? Who's responsible for what? Who calls for that NSF payment? Who calls for that, fire insurance that lapsed? Who's responsible for putting fire insurance on the property if it lapses? All those kind of questions that people don't really think about if they don't do this every day. You plan for the worst and hope for the best. And that's really our company motto. And the other side benefit of using an administrator is we can do registered and unregistered funds in one mortgage together. Versus a lot of people were just using Olympia funds. So now you have the advantage of a whole other suite of investors to put it in just regular kind of cash investors. So what does it cost? It's a big common question we get. We've been running this way with Olympia. We've been doing all of our deals for years. And now we have this other person involved in the mix. And what does it cost? So it's not cheap because it's a very labor intensive business. So we automate as much as we can. But this is really all about human beings picking up and dealing with every aspect of the transaction. So we base our pricing on the number of investors that we have on a file, not the number of accounts. So if one person has an RSP and an RESP, that counts as one investor. So there's an annual fee, which is paid in the monthly payments, and a setup fee for setting up the loan. And the reason I have here with 4 or more investors is it gets really complicated, explaining the same file to 5, 6, 7 people. So we really want to try to dissuade that. So what do we do? What are some of the features that administrators have? Well, because we try to automate as much as we can, we have a really good tech package. We give reminders on SMS and emails, detailed monthly statements, T5s if it's not a registered account. We have borrower portals and lender portals. We follow all the sort of compliance documents that we need to. And yeah, we'll go from there. On February 7th, I know we're going to have a lot of questions, and Barry will go back and forth with some details. I'm kind of skimming really high level here. But I'm going to do an in-depth talk on this, where I'm going to get nitty-gritty on, looking at appraisals and looking at credit and what is private lending, and what's a good deal versus a bad deal on Thursday, April 7th. I don't want to bore people that aren't interested in how to look at files in that kind of technical detail.
Okay. All right. Well, thanks for that. Thanks for that overview, Chad.
Yeah.
So now, again, for the folks who maybe haven't done any lending, or we're just thinking about getting into some registered plan lending with Olympia.
Yeah.
Prior to this announcement, what somebody would do is they would get hold of, if they wanted to make a private loan through their registered plan, they get in touch with Olympia, say, hi, we're interested in doing this. Olympia would say, okay, well, you have to open up an account with us. You have to get some cash in that account. Here's a set of forms that you need to give us information through.
Yep.
Got to get the other, if you're the lender, you've got to get the other party to participate in this. And so, complete these forms and get it back to us, pick a lawyer, and get going.
That's it, yeah.
It was about as simple as that in terms of what they wanted you to do. Now, over a long time doing this, I think I've been doing these mortgages for probably 25 years or more. As much as it seemed simple, as I explained to folks in about a 10-page information letter that I used to send to them, when I would get started on an RSP loan after being through a bunch of them and just not going well, I created about a 10-page information letter, the essence of which is, listen, you want to be a lender, and that's not what you do in your daily life. You actually, forgive me for saying so, have no idea how to be a lender.
Yep.
And you, Mr. Borrower, you have no idea how to negotiate a loan or what's good or what's bad. Neither of you have any clue about diligence, because if you're borrowing, you go to the bank and they set it up for you.
Yeah.
You all think Olympia is taking care of you, and as much as they've told you they're not. But I know you think they are. And so over the years, I have personally found registered plan lending to be difficult just because of the lack of knowledge on most folks who are just getting started. You start and you learn, you get better at it. But initially, it was, even with this kind of simple setup that Olympia had, okay, open your account. Here's the forms, read them, fill them in properly, get them back to them, get yourself a lawyer, get a mortgage drafted, get us to approve it. Here's a couple of other wrinkles and you're done.
Yeah.
That was, folks, I'm telling you, that was from simplicity's side of things, heaven. Because life has now changed, and Olympia has moved in this direction because I think we all believe, anyway, we don't know for sure because I don't think Olympia said, but we believe they've had some nasty experience with a couple of groups of investors out, mainly here in the West, although there could be lots of experience in lots of jurisdictions, but there's certainly been some kerfuffle out here in the West. And I think I've heard you say, Chad, that you believe Olympia is getting the blowback from those deals that have gone bad. Is that your perception?
That's my perception. And really, so they haven't changed their regular mortgage policy. So if you are just one investor and you want to give out a mortgage to somebody, just, straight up, very simple, very plain Jane kind of mortgage, that nothing has changed with Olympia about that. Where they're putting these extra rules in place is when somebody's either related to the borrower or lender, so the mortgage broker or the promoter is related to one of the parties, or there's more than one party in it. And the reason comes really into when there's a problem, right? When everything's working great, nobody cares. It's quite fine. mortgage is going along, everybody's getting paid, everybody's happy. You know, it's always when things go bad, then they realize that there's this problem. And I always like to say this from a syndication perspective, because we do a lot of, you know, residential syndicated lending. So if you have two friends or three, you know, on a file, and they're lending to a stranger, and the person makes an NSF and they're 30 days late, and one friend says, I want to start a power sale, and the other friend says no. Well, if you don't have a third-party administrator or really good agreements drawn up, how do you rectify that decision?
Yeah.
And then people are like, oh, I never thought about that, right? How much leeway do you give somebody before you send them a demand letter? All those kind of little nuances. To your point, Barry, is, you know, most people don't do this every day, and so they don't think about all these little things that can happen. Yeah. But that's our job. That's what we do.
That's the job. And the well, I mean, if we go back a step, one of the things that I say when I'm talking to people in my focus workshops and we're teaching them about creative strategies is we talk about, just go around the room, you know, what do you do in your daily life? Oh, you're a doctor, you're a carpenter, you're a tech administrator. And then we talk about how long did it take to learn how to do that and get good at it. And how is it that you can expect to be good at being a private lender when, Chad, as a mortgage broker and a mortgage administrator and a guy who runs a MIC, I mean, he had to do a whole bunch of training, as mortgage brokers and administrators have to do. You don't just get to do it. You got to learn how to do it, and you got to get good at it. So,
Absolutely.
And now we're talking about your money, which makes it even more important. So it's not surprising to me at all, really, that Olympia has done this. I had a question for you. I saw that in their email to us all telling us about the new rules, they go, Olympia reserves the right to request an independent third-party administrator for any new mortgage.
Right.
Right. There it is. So on the screen, and I'm reading.
That's awesome.
And so I guess I was thinking to myself, so what will provoke them to say, you know what, folks, you're just one person. It's not a syndicated thing, but you're one person, but we think you need an administrator. I guess we'll find out, but I'm thinking that if somebody shows up on Olympia's door and they want to do a single person loan, unless it goes absolutely tick swimmingly with their interaction with Olympia, the minute it looks like somebody either isn't paying attention or doesn't know what they're doing or is new or naive or maybe, Olympia will say, you know what, you need your administrator. Yeah. Is what I think, but I guess time will tell.
Absolutely. And that's what my guess is, right? We're just, like you said, we're just kind of guessing at this point on those things, but Olympia does not make a lot of money doing this administration, right? It's pennies really on the kind of volumes that's happening. And so anytime a human being needs to be involved in it, it's probably costing them money versus actually making them money. Yeah. So if they have to explain a mortgage contract to somebody, or there's an issue with a lawyer, all of a sudden you got hours. So a very small item can take like hours and hours and hours to unpack and fix. And then people don't understand, like, just explaining compound interest to people, it sounds so simple. And then they're like, well, what do you mean? What's monthly or semi-annually or quarterly or annually? And like the conversation go on for hours.
Yeah.
So
it's, the more we think about it, it's completely understandable why Olympia is doing what they're doing. But let's talk about some of the changes, for instance. So right now, I think in Alberta, and I'm guessing across the country, Olympia did allow loans up to a 100% loan to value situation. Yeah. And that in Alberta, if you had a tax assessment or I think a purchase contract or an appraisal, any one of those things was acceptable as 100% loan to value.
Right. And
I've run into any number of circumstances where I've looked at deals and it's 100% loan to value with an interest rate of 2%. Yeah. And I'm going, I'm a lawyer, not a property analyst or a mortgage broker, but this doesn't look very good to me. So then is the question of the appropriate loan to value ratio for any loan going to be something that you as an administrator will look at and decide whether the loan to value is correct, or are you going to stick to the Olympia 100%? How will that work under the new rules?
So it's about appropriateness of the investment for the investor and how knowledgeable and sophisticated is that investor. So if somebody's, putting their life savings on a deal, it's 100% loan to value in rural, we're only licensed for Ontario, so I'm going to say just rural Ontario. I would probably step in and say, no, I don't feel confident with that, and I can't recommend that. So I won't let you under my license do that. Yeah. That is Olympia's rules. We're not judge, jury, and on these files, because we're not the lenders, right? We're just administrators, so we're not giving the approvals or not. But I would step in that case and say, I don't feel it's appropriate for you. And then the investor can say, well, no, I feel it is, because look, here's $1 million of investments I didn't tell you about. And I'm like, oh, okay. Right. That's fine if you can have that loss. So that's where I see all of the government's going, is this kind of rules-based responsibility that is it appropriate? And there's no black and white line, what's appropriate for a person or what's not, or what risk can they take or what's not. It's just, is it reasonable? And that's that test, is the reasonability test.
Yes, which certainly makes sense, but is of course a big change from you can do 100% loan to value. That was the rule. And
big thing for me that we, as a policy of our company, is that we will not fund a mortgage without an appraisal. We just won't. And so whether you got an agreement of purchase and sale or a tax assessment, like you mentioned, and I say that's great, but you want to work through us, we need an appraisal. And because again, we're looking out for the investor. That's our job. That if I have to stand in front of a judge 5 years from now and say, why did you say this was okay? I have all that paperwork to back up that we did the best job we could do. And appraisals are one of those things.
So now those are your internal rules as a mortgage administrator who's gone through the getting approved with Olympia process, which I think you said took about a year.
Almost a year.
My goodness. Do you think that's going to be similar for other people applying to be Olympia approved administrators, or is that going to clean up?
Still, the rule is you don't need it, and a offer to purchase is currently accepted by Olympia as proof of value. Now, putting my real estate hat on, I don't agree with that assumption, because people overpay, they underpay. An agreement is just one document in a way to test the value of a property.
And people manipulate those offers to purchase as well.
And that too.
Yeah, for sure. Okay.
Here's a question.
All right. Let's
This one's about appraisals.
We'll look at some questions. Will appraisals come in below the tax assessed value often? What do you think, Chad?
So, I mean, not where we are. In Ontario, the tax assessment tends to be about, wow, this market is crazy way today and it changes. But, we're 20 to 30% above tax assessed value at the moment. And but that is a very regional question. So I'd be careful with that, depending on what area you're lending in or borrowing.
Yeah, I think here in Alberta, my observation over the years has been the tax assessed value has lagged the market or appraised value, maybe not by 30%, because our market has not been near as active as Ontario, as positive and accumulating as Ontario. But tax assessed values are often underneath market or appraised value in various percentages in various areas. Right?
But the neat thing about tax assessment value, where you got to be careful as a lender, and again, so I view, when we're underwriting files, I use multiple data points to determine value of real estate. Tax assessment is one of them, right? Appraisal is another. And, what's the condition of the property? The tax assessment doesn't talk about that. Is it in great condition? Or is there no walls in the inside of the house? Right? There's no way to know unless you're getting those photos in that appraisal.
Yeah, no, for sure. Donna, do we have more questions that we should be answered before carrying on?
If you want to go a little further, I'll get them organized.
All right, Donna's going to organize some questions. Now, let's talk about the timing side. We've talked about cost. We haven't talked about timing. So if folks are thinking about doing a syndicated mortgage, they know about the new rules, and they're going to get started. Do you have any sense of what it will take from them getting in touch to say, we want to do this loan,
Mhm.
to working your way through to the point where this loan gets funded?
So the very first time we work with a client, I'd say add an extra 2 or 3 weeks. And primarily it's because we need to onboard the investors, and people tend to be just slow individually. So we have a form we send all of our investors. It's called the Know Your Client form. We have to get their ID, all their Olympia account information, get them to sign that paperwork, and of course provide our administration agreement, which is 20 pages long, and have the investors take time to read it and understand it. The second deal, once an investor's onboarded, if it's the same investor, we can turn a file around in 24 hours. But that first initial one, I'd say add a few weeks just to be safe. Nobody likes to rush. No lawyers like to rush, and it's not good to add the stress.
It doesn't work well to rush really anything, and certainly what we do in law and in mortgage administration and mortgage lending, rushing's not good. All right, so the setup will take longer when somebody's just getting aboard with a mortgage administrator, and I think any mortgage administrator will be having a kind of similar.
I would assume so.
Thoughts, as you do. Now, this, I think we said at the beginning, but we should say again that mortgage administration is a provincially regulated thing. So as much as Olympia operates, I believe, across Canada,
Mm-hmm.
I think they operate across Canada, and what they want to do now with syndicated mortgages and their new rules, likely going to be across Canada. The how things get administered will run according to provincial rules, and so some of the differences in Alberta, we don't have the regulated position of mortgage administrator. We have the regulated position of mortgage broker, and I think mortgage brokers sometimes fulfill the role of an administrator because they can take that on, but there isn't that separate designation. So I'm thinking Olympia will have to make some sort of comment on what they will accept in Alberta under that new set of rules in order to make it fit for the way things run here right now. And I don't know, what it's like in British Columbia or Saskatchewan or New Brunswick. But
so the East Coast does have a licensed administrator position, and I believe so does BC. Effectively, if they have a trust account that's regulated by a provincial body, is their litmus test, is what I'm kind of understanding. And it's important to note to all of your listeners it's where the property is located is the license that it needs to fall under, not the investors and not you. So if you're buying a property in Saskatchewan, then it needs to be a Saskatchewan license, so on and so forth.
Okay, so that makes sense. So people are going to have to, if they're lending in multiple jurisdictions, they're going to have to get a roster of multiple administrators in order to give them a hand.
Absolutely. And some things is a bit obscure. Like, we looked at doing out east, and we will, but the cost of setting up that license and the insurance aspect is quite substantial on the East Coast. So it's very prohibitive, actually, unless you're doing a lot of volume.
So they charge you more to set up as an administrator there? Is that what they're doing?
Well, not specifically. What they've done is, and I'm hoping they'll change this now because there's going to be a lot more administrators signing up, but New Brunswick in particular was asking for this E&O policy that is extremely onerous. And there's only 2 providers that offer it. And the minimum premium for this E&O policy for us is $25,000 a year.
All right. So you have to be insured, and the cost of insurance is prohibitive.
Exactly. Versus any other province. So the insurance I have would be applicable everywhere except New Brunswick. Yeah. And it's reasonable. It's like a normal, E&O kind of policy, but they just put this really ridiculous clause in there. It's bizarre.
And so that's one of the provincial differences. So as we said, the administrators run under provincial rules, and New Brunswick has a particular bee in their bonnet.
Yeah.
And so they've added a policy that got a $25,000 premium attached to it, which probably means unless you're going to write a whole whack of policies, you're not going to operate in New Brunswick.
Exactly.
Yeah, there'd be no point to that, would there?
Or the cost would just be very, very high. Nobody would do it anyway.
Yeah. So maybe they're trying to suppress private lending, perhaps.
It could be, and I kind of see that happening right across the country a little bit. As you know, the private lending, I kind of joke, it's coming into the light because as the banks get more and more strict and they put more and more rules and regulations, people are looking for other creative options, and especially entrepreneurs and real estate entrepreneurs. So we've now come to the forefront, and the CMHC report. Oh, I should have pulled it up. Anyways, whereas private lending is a substantial part of the Canadian mortgage market now, like it's on the map. And the minute you get on the map, the regulators start looking at it, going, "Oh, maybe we should try to regulate this and get our fees into our hands into this as much as they can."
So I guess this is part of that, maybe chipping away at the independence of the private lender is on the registered plan lending side of it. It is going to be regulated now.
Yeah.
And I'm sure there'll be other ways for government regulators to worm their way into the non-registered lending side of things. Yeah, because as soon as you're on the radar, there's money to be made. Government says. Donna, any questions for us?
Sure. You want to do?
Yeah, let's have some questions here. Comment that a private lender can't lend a family to a family.
Yeah.
What is the definition of family? Oh, I see. Lend to a family member. The arm's length issue.
Yeah.
So I think this question is a private lender has to be arm's length in a registered plan. And what's the definition of arm's length with respect to family?
Ooh.
Sorry, I can't talk today.
So it's immediate. My interpretation of that is it's immediate family members, something that would have undue kind of control. So I would say a cousin is probably fine, but mother, father, brother, sister, children, it would not be arm's length. Or a company that you control is another thing that's not arm's length.
That's my understanding as well. That immediate family would come under the definition of non-arm's length. All right, that's a good question. And next up we have, how do investors find Olympia-accredited brokers and administrators? Well, in each province. You know, I'd like to be able to say, just go to Olympia's website and they'll tell you, but I don't think so. Olympia has been pretty quiet about a bunch of the details of, you now need an administrator. What do you say, Chad?
Yeah, same thing. There's no list. And I've actually asked them as well, and they haven't even provided me with a bunch of names. Because, again, I'm only licensed in Ontario. So I'm like, if you're doing a BC, call so-and-so.
Yeah.
And they haven't been forthcoming with even on our side. So it's a bit of a, Google's your best friend.
Well, what would you search?
What would your search says, Donna? Search accredited Olympia mortgage administrators.
Sure. I guess
that would be a search term. Now, whether it gets you anything is another matter.
Yeah.
It's another matter. All right, Donna, another question for us here. Sean Impey. Sean's a mortgage broker here in Alberta, Chad, and he's helps us out on the Monday main event. Does the administrator have to follow Security Commission rules regarding qualified investors as part of the process? Oh, that's a good question, Sean.
Yeah, so it's a very interesting question. So again, it's very provincial. So in Ontario, no, unless it's a non-qualified syndicated mortgage, which means that it's commercial or construction or something like that. So for regular investors, regular mortgages, no. Okay.
And I kind of think that's the way it is in Alberta, that in my reading of the Securities Commission material, it doesn't look like it would apply to this. Thank you, Denise. Olympia will not be providing any referrals. That's mildly bizarre to say you have to do this, and we kind of approve these administrators, but we're not going to tell you who they are.
And that's why doing things like this is so important.
Just
helping get information out there.
Well, we've got to get the word out. You're going to have to get licensed in more places, Chad, because if you do very many more of these, you're going to be the go-to guy because you're the only one anybody will know about, which can be good and bad, I guess.
Yeah.
JP Cabral asks, what's the estimated costs on a mortgage? Well, JP, we had a slide that talked about how this works, and what Chad told us is that there is a setup fee, and Chad, I'm guessing that's a one-time setup.
A one-time setup fee, yeah.
One-time setup fee, and then there are annual administration costs that are a percentage of the mortgage, and those annual administrative costs vary by the number of people who are in the syndicated mortgage, and the larger or the greater the number of investors on the mortgage, the larger the percentage, because it gets very complicated administering a mortgage with, say, 9 people in it. Is that how it
That's
works?
exactly it. At that point, it'd be like herding cats. So it'd be a lot of work. But I kind of say just budget, a rule of thumb generally is 1%, unless there's a lot of investors or it's very complicated. That would probably be a good baseline.
So a 1% annual fee on the admin side. So $100,000 mortgage would be $1,000 annually for the administrative side. And what would be the setup fee at the beginning?
So it ranges from 0.5% to 1.5%. So depending on the number of people. So I can put the slide back up if you want. Now this is my fee structure. But somebody else, other administrators might have totally different fee structures. Hold on, just share my screen. Oh, you guys still there? Oh, it looks like I got frozen. Oh, you there? Hello. Oh. I don't know if I'm the only one that's frozen. Oh, technical issues. Okay. Well, I'm not sure if I'll be frozen. Okay, you guys can still hear me. All right. Well, I'm still talking away. All right. Thank you for managing that. So I'll just go into the fees a little bit, as that was a question. So if we're less than 2 investors, we charge 0.5% annual fee and a setup fee of 0.75. And if we're 2 to 4 investors, we're charging 0.65 annual fee and 1% setup fee. And this might change as we go on if we can get things more efficient, and especially multiple deals will be better. I can't hear me. Oh no. Oh, they hear me. Barry's frozen. Looks like, can you guys still hear me? Thumbs up, yes, no. Gotta love the internet. All right, conversion fees and be paid for by the borrower or lender. All right, so good. Okay, so it can be set up however you guys want. So we're indifferent of the cost. It's part cost of the overall deal. It's generally the investor that pays for it, but it's coming out of the investor yield. At the end of the day, the borrower is paying for all the costs. It depends how you guys structure your file. The most important thing I found, if you're used to doing private loans like this on yourself and you have been for a while, it's a different process. One of the things that Olympia Trust really is trying to do is get the borrower out of the deal and just have somebody third party, independent, talking to the lawyers, talking to the appraisers, doing the paperwork to make sure that there's no, we don't have any skin in the game real estate transaction, right? There's no incentive for us on that mortgage other than just preparing that administration file. So have an independent person with no tie to the property. Hey, there we go. You're back. Yeah. Awesome.
Okay, how's my sound now that I moved over to Donna's computer?
No, I hear you fine.
Okay, great.
Yeah.
So I missed the last 4 minutes of things. So
okay. I kind of went through the fees a little bit, and then there's some questions. I think Nancy has a question.
All right,
Nancy.
Let's go. Let's find Nancy's question and get that up there. Where's Francis? Where's Nancy? Do you see Nancy's question?
Yeah,
Chad.
Yeah, it's do you think this will discourage borrowers from accepting registered funds for their projects? Will we as lenders now have less options for investing our funds now? So in my case, I don't think so at all. I think that as a lender, you're going to have more options, not less, because it's going to come through companies like mine and others that have just a lot of deal flow. So you're going to see more and be more streamlined. borrowers at the end of the day, if the project is profitable, a cost is a cost. Just like interest rate, just like lumber, just like, if they're going to make 500,000 on a file doing a flip, if you're in Toronto, well, an extra $5,000 won't make a difference.
Yeah.
It's, it's just, if the profitability is there, it's there.
And that's really, I think, what people have to come to terms with is it used to be one way with registered plans. It's a different way now. And you have to analyze your new deal on the basis of the new rules. Yeah. And there still, I think, should be lots of room for private lending and making a decent profit. Yeah, you might not make quite as much, but on the other hand, you might have a loan that runs way more smoothly, a loan that has a way better chance of not going bad on you because it's been properly vetted and looked at. And we won't have these giant sets of disasters that we've had where so many people have lent money having no idea what they're doing or why they were doing it, and having those loans go bad on them. So, I mean, I think there's lots of upside to this new set of rules, and that folks need to look at this positively, give themselves a lot more time not a lot more time, but at least a chunk more time until this kind of settles down and everybody gets to understand the new rules. But we're not going to abandon registered plan lending. I mean, that's not it. That's definitely not it.
And I think part of too, and this is just my own guess, is there's been a lot of creative deal flow going on that's kind of pushing the level of creative. And I love being creative. But they really should be in kind of like an offer memorandum product or a more sophisticated kind of product that you can still use RSP funds in. It's just a lot more disclosure and a lot more legal setup and liability to the people running those funds. Like the mix that I set up, our OM is, 100 and something pages long, and lawyers had to vet it and accountants had to vet it, and it had to be completely, done for compliance purposes. And I think some of these projects or type of lending maybe should be in that realm versus just one-off with investors and borrowers that, are starting a little bit too new.
Yeah. Yes. Couple of questions on who's paying for these things, Francis and Francis and I skipped by.
Just stop. Let me find it.
Francis and Myrna.
Yeah.
Who pays for the setup fee and the annual fee? Is it the investor or the RRSP owner?
So yeah, which terms you're using. So it's usually the lender that pays for this. It comes off the lending side, but again, it comes to the borrower. So a typical transaction that we see is, if a borrower is paying 8% rate and a 2% lender fee, and we're charging that setup fee, so the investor is getting, let's call it 7.5% and 1%. So the investor does get less, but the borrower is paying for it usually from the whole deal perspective.
Yeah, when lenders offload all the costs of the loan onto the borrower is pretty typical for for any kind of a loan. Banks never pay their fees.
No.
Pardon me. All right. See what else we got. Basically, a single investor lender should expect to have to pay additional fees then. Expect the worst, hope for the best. No third party. So, well, I don't think we said that a single investor should have to expect to pay additional fees, because what Olympia said is that these rules apply to syndicated loans, although they have the option to require a single lender to have an administrator. So that wasn't a for sure. That was we reserved the option to do it. I kind of think they're going to, quite a few individual loans will have to get that kind of treatment, but we don't really know that.
No, I mean, and again, it's just speculation, but obviously Olympia's, they're a smart company, and they're going to Google the borrower's name. They're going to Google the property address. They're going to, so if they see that a real estate promoter that flips 100 properties a year still has that one investor, then that I could see them saying, no, get a third party involved, because this is a professional borrower. If you're just lending to a friend down the street and there's no third parties involved, it's just a regular home on somebody's owner occupied home, I don't think they'd have a third party. and again, this is just speculation, but it's just when they want to make sure people aren't unduly influenced on a loan. That's my perception of it anyway.
Yeah. We're going to see what they do with that. It could easily be that way, or if there's any trouble, out it goes.
Yeah, could
Talk to an administrator. Let's see. Here's a question: as a borrower, what is the least amount Olympia will fund as a single borrower? So the smallest mortgage loan that they will let you lend. I wonder if that's what the question is. I don't know the answer to that one, Chad. Do you?
I don't know that one. In my world, anything lending less than 25 grand just isn't worth the setup costs.
Yeah.
Without me even involved, right? Just the lawyer, the whole registering a mortgage, it's just expensive.
Yeah. Forget about the administrator side of it. As you know, if it was under the old rules where it's just the borrower and the lender and Olympia trying to get together and then telling me what they want me to put together as security at $25,000. No. Yeah. So it's a practical economic matter. I think it might even bump it up to 50 before I would say, you got to get to 50 before you don't have so much deducted that your actual rate is so high you wouldn't want to do this loan.
Yeah, exactly.
All right. What else do we have? Francis says, if the first mortgage is through a first mortgage lender's RSP TFSA and a second mortgage on the same property is through the first lender's spouse's RSP TFSA, is this a syndicated mortgage? I don't think so. What do you say, Chad?
No, if it's a first and a second, no, because they're two separate charges. And then one would ask, okay, well, you could do it as a syndicated mortgage, but it don't necessarily have to be.
Yeah, so just set up like that. Those are two separate lenders, two separate charges, and so that doesn't fall under the definition of it being a syndicated mortgage.
Yeah.
All right. Does Sean say? Sean, our ACE local mortgage broker. Some administrators in Alberta are under the Alberta Securities Commission. I've been told by these folks they need to follow ASC guidelines. I haven't found any administrators through the mortgage broker channel. So whether some of those administrators think they need to follow ASC guidelines, it may be because the kinds of loans they're doing aren't the things that we're talking about. I mean, we're talking about, basic loans and not stuff to which the Alberta Securities Act would apply. And as for no administrators through the mortgage broker channel, I'm guessing, Sean, are you saying that's the Cross Canada mortgage broker channel? And would you have expected to find
Alberta
mortgage brokers kind of listed in the mortgage channel because all the brokers are? Would that have been your expectation, but they're just not there? And maybe there's not very many mortgage administrators, Chad. I mean, are you a common beastie or is there?
No, there's only a couple hundred in Ontario registered, and most of those are self-administrators for our own mix and those kind of things. So third-party administrators are definitely not common. Sorry, go ahead.
All right. And as opposed to if there's a couple of hundred administrators in Ontario, how many mortgage brokers are there?
Oh, thousands and thousands.
Thousands and thousands.
10,000.
Tens of thousands, probably.
Yeah. And another term somebody could search for is actually mortgage servicing as well as another, not just administrator. People call it mortgage servicing is another word that people use.
Mortgage servicing. Nancy says, can we still combine our accounts up to that 50K?
Sure.
Yeah, I think so. No reason why not there. All right. We're ripping through the questions now. I think we're doing pretty good. I think we may have caught up. No? Donna says no.
More.
All right. What liability would the mortgage administrator face?
So we don't, we can't guarantee a loan, right? We're not recommending a loan. At the end of the day, investors are always making the decision to lend or not lend. So we don't have a liability from a deal perspective on a loss. Our liability is really, are we doing things correctly? Are the paperwork done right? Are the disclosures done right? And is it a suitable investment for somebody? That's more where the liability lies. And things like there was some mortgage administrators that got in trouble maybe 5-6 years ago here in Ontario where they collected payments from the borrowers. They went NSF. They kept paying the investors for 2 or 3 months. and the investors didn't know the properties were in default. So one of our immediately of any defaults on insurance or mortgage payments or anything like that.
Nasty.
Yeah.
Nasty. Next question. As someone who does a lot of RSP mortgages through Olympia Trust, is there value in getting licensed? Pros versus cons. So get to be a mortgage administrator and then what? Administer your own loans? Is that I don't think you can do that. That would sort of fly in the face of it. What do you think, Chad?
So it depends where you're getting your business from and if you're just an investor. So if you're just an investor, other people are bringing you business, I don't see an advantage to being licensed. If you're promoting doing RSP loans for other people and trying to put people together, then you're brokering, and then you should get your brokers and administrators license. So it really comes if you're using your funds or, putting other people's stuff together.
Okay. All right. Sean is a busy guy here.
He was, yeah.
RECA, the Real Estate Council of Alberta is RECA.
Yeah.
Doesn't have any insight on a mortgage administrator's classification. Talk to the head guy. This may change in the future. I think you're right, Sean. I'm sure this is going to change as everybody who's involved in this end of the business starts to realize what Olympia has done and what it means for them. Because I think RECA here in Alberta is our organization that licenses mortgage brokers. So it's and realtors and property managers. And so it's logical that they would be gathering all the information they can and probably having something to say about this. And maybe they're going to be involved in having that separate classification that you've got in Ontario of mortgage administrator, or perhaps widening the mortgage broker classification to allow an administrative and better defined administrative function under the current classification of mortgage broker. But that is going to develop a lot over the next few months. So we're going to have to keep a careful eye on what happens here in Alberta through the Real Estate Council of Alberta.
Oh, there you go. That's a nice
Sam, this morning I did call Olympia, and the office said, send RECA license copy and general management agreement. They will set me up as a mortgage administration person.
There you go.
Well, Sam, I want you to get right on that. I want you to jump in and get yourself going, Sam, and then to really give us the blow by blow of how that went for you and what the hoops were and what you learned and didn't learn and how long it took and everything else that other folks would want to know, because we are a sharing group. This is how we figure things out, is we talk to each other and we share information and knowledge and try and improve the process for everyone going forward. So Sam, we want you to do that, and we want you to keep us up to speed. Right. Facebook user, is there any chance that a USA 401k loan will seep into Canada, or are they regulated as Canadian administration?
Yeah, so the 401ks are out of like the RSPs in the States. I don't think that will end up being a product here in Canada. At least that's my
Yeah.
I
haven't heard anything about that. I don't think there's any plans to do anything about it at the moment. And stuff just doesn't cross borders very well. I mean, you might take the germ of an idea and bring it over and then put your own local rules around it. And so it might superficially resemble what's happening south of the border, but we don't know anything about this right now, and we doubt it for the moment, I guess, is the best comment. All right, Donna, anybody else?
The license
is easy.
Sean, the license is easy. The agreement, not so much. Yes, the agreement will be not so much, for sure. I think Chad talked to his agreements run for pages and pages and pages, but lots to talk about. As you said earlier, Chad, when folks are setting up these things on their own, they have no idea of the subtleties and the nuances and the things and the diligence that you have to look at. And you only learn that by being in the business and making mistakes and figuring it out, and then amending your agreement and making another mistake and changing it again. And that's why agreements get to be pages and pages and pages long. So, all right.
We can call it.
I think, it's time to do a bit of a summary here. Chad, do you have a summary for our listeners on, a summary? I'm not going to tell you.
So I don't think the sky's falling on this at all. I mean, I look at it as not necessarily a bad thing. It will help just bring the industry up to a little bit more professionalism on these kind of files, and just be prepared for a little bit longer process, especially at first, and a little bit more cost. But and don't rush. Don't be frustrated. Talk with guys like me and everybody else, like Sean, and people that are working through, and Barry, and just have discussions. And don't be scared about a slightly different process. And that's the biggest thing I've seen, is that people are saying, well, I haven't done it this way before. I'm like, okay, well, that was before, this is now. And again, my process is going to be very different than another administrator's. It should be different than another administrator's. We'll all have different flavors and processes. So connect with the people you vibe with and that you feel comfortable working with. Yeah.
One more question.
Yeah, I think... I don't think I have much more to add to that. Just say times are different now, folks. If there's a decent loan that will turn a decent profit, you might just be down a little bit on the profit side of things, or maybe you can pass on all the costs. But loans are going to be safer. People are going to be protected more. There'll be less weeping and gnashing of teeth when a loan goes bad because somebody didn't know what they were doing. And so overall, I think it's an industry improvement that will serve everyone better, even though it's going to be a little more time consuming and a little more costly. Overall, it's better.
Absolutely.
Is what I think.
Yeah.
Last question. Corey Vance, is a mortgage broker the same thing as someone with a broker's and administrator's license? I don't know. What do you think, Chad?
It depends on province. So in Ontario, no, they're two separate licenses. In other provinces, it might be the same license.
Yeah, I think that's going to be a local question, and you have to get into the local administrative rules for mortgage brokers and mortgage administrators in your province.
Yeah.
All right. Well, that, folks, brings us to the end of this session. We want to thank Chad for taking his valuable time to talk to us. Chad's located in Ontario. He's got another in-depth event coming up. So there's Chad's details. If you're interested in talking mortgages, getting mortgages going, make sure you contact him in Ontario. He's in Ottawa. Chad, tell us again when your next event is. I know we had the slide at the beginning, but tell us again, and so people can get ready for that.
It's on April 7th and Thursday at 7 p.m. And I put it in the chat window, the link. I don't know if you saw that.
I did. One
All
second.
right, if you could click that up.
Here we are. Donna will pop it up for us here.
Awesome. Thank you for doing that.
Comment, paste, and
Just
coming up.
Circle's going.
The circle's moving.
And on this webinar, I'm trying to go a lot deeper onto what is an appraisal and how do we view it and why, and what's just some basic underwriting stuff, a little bit more granular than this.
Yeah, we've had as you say, the 30,000 foot look at this. Now you're going to drill down into the details coming up. We've posted the link. People can see the link now, and folks, that link is also in the chat. So if you want to hear Chad talking about way more this issue in way more detail, then make sure you tune in on April 7th.
Yeah.
On April 7th. Use that link. All right, Chad. Well, thanks again for showing up and helping out.
Awesome. Thanks.
All right.
See everybody.
Good night, everybody.
Good night.
Good night, everybody. That's Donna. That's me.